Hey Chris, good morning. How you doing?
Good morning, my friend. I'm very good. How are you?
Excellent, excellent. I'm here. I'm Brian with. I'm here with Chris Hood, professional trader and world's most interesting man, holding it down in
Oh,
Canada.
I think that interesting thing starts getting a bit boring now. I don't know. I've got the world's most interesting diet, which is
So, so you're gonna have to do something interesting then. Like,
I have to. I have to.
you're
I've
gonna.
decided
Yeah.
I've got to start getting back into the whole jiu-jitsu mindset again because the schools are going to open up soon. Oh man, I think I was telling my wife the other day. I was like, I'm in the top 10 in Canada, and she goes, "Well, that's great. How many people are there? Six." So and then she said, "Well, which number are you?" I said, "I think I'm six." But I've always wanted to be top 10 of something. So I'm really looking forward to that playing out over the next couple of months. So
Nice. You've been locked in your house for a while, and they're just now letting you guys out.
yeah,
If if I
it's
were locked in into my house as long as you, I think my house would look like a serial killer. I would just start scribbling things on the walls and
yeah,
putting
we
like,
moved house. I left that in the old house.
oh, did you? Okay.
Yeah,
The
yeah, yeah, I
this
left it in the old house. I ran out of writing space on the wall, so we had to move.
yeah,
I
the
couldn't.
serial killer trope, movie trope is like whenever you go to somebody's house and it's wallpapered with newspaper clippings and maps with symbols drawn from one thing to the other, people's eyes blacked out, and then you know, like
What
sort
was
of,
it that basement that they had in Silence of the Lambs, where Buffalo Bill had all those things?
oh yeah, yeah.
Yeah, no, no, we don't have that. No, it's pretty boring. You got to remember here, it's pretty. It's almost like Stepford Wives kind of community. I mean, I look outside and every house looks the same, and typical. Um, yeah, I think once jujitsu starts opening up and I can actually start, satisfying my need to do organized murder, I'll feel a lot better. It's starting to come. It's starting to come. So looking forward to it.
Good deal.
But markets are interesting enough. Let's just put it that way.
Yeah.
World's most boring man with the world's most interesting market. That makes more sense to me.
So what do you see here? We had a big sell off. We had some flat days, kind of a big sell off, and looks like
Yesterday
maybe a
was interesting.
bounce.
Yeah, I think you know what. Last week was good because last week we knew the world, well, we knew the pricing was extended, right? We knew everything was trading up at really extended prices. There was a lot of FOMO trading going on. People were just pushing up stuff recklessly, right? So when it pulled back Thursday, Friday, um, that was pretty much exactly what that's the script of this time of the year and that nature of the market, right? At that point. So we were fortunate. We did some bearish trades that paid off really, really well yesterday. So yesterday, I think, was one of our maybe our second or third biggest day that we've had for the clients. And that's normal, right? So we took our profits yesterday. Now today, you expect a bit of a bounce, and we're going to see that in the futures market as well. We can see the market moving up. There are pockets of opportunity, and this is the difficulty of trading at this time. It's not just like a blanket where you can go, oh, well, I'm just going to throw a dart and, I'll make money. There are periods of the year where that is certainly the case. Between now and the end of August, you've just got to be a little bit more refined. And what I was saying to my clients the other day was, this is the time when all that work that you've done in the past 6, 7 months on refining your plan, making sure your rules work, all of those things start to materialize with results. Because the more detail orientated you are, the better you are at identifying opportunities, the better you are at identifying the strategies that work for you, the better your results are going to be when markets are difficult. A lot of people tend to only want to trade when the sun is shining, and where there's unicorn and glitter and whatever. And unfortunately, the world doesn't work like that, right? In trading, you have these cycles, and we're in a cycle where what worked 3 months ago is not going to work now. I mean, we might be going back, I think, into a repeat of what we saw with COVID from last year, because now with this Delta variant starting to push up pretty much a pandemic in the non-vaccinated group of people, wherever they are in the world, it's starting to push stocks like Zoom and all of those things that were doing well back in the COVID time back now to the forefront. So Could that be another opportunity over the next couple of weeks? I don't know. I take each day as it comes during this period. So between now and the end of August, you take each day as it comes. You don't try and make too big a bet in any direction, because you'll get whipsawed straight away. You know, if you look at guys yesterday, there were a couple of guys I know that were shorting in the hole. You know, market was down 700-800 points at the end of the day. At some point, it was down 900 points. And generally what happens is with retail guys is they see the gap down. Then they wait. They go, oh, it can't get any worse. It can't get any worse. It's getting worse. It's getting worse. It's getting worse. And then they go, right, now it's time to short. And as soon as they do that, it's usually the point of complete capitulation. That's when the market turns. So by the end of the day, that guy that shorted at around 12 o'clock yesterday, he was out of the money. He was gone. He got already whipsawed out. So you've just got to be really careful. You take each day as it comes. I mean, a simple trick that I do that helps me position for the next day is between 2:30 and 4, I watch the 15-minute chart and I look and see how momentum's starting to shift. Because once you start seeing the squeezes starting to develop, the squeezes starting to fire, the squeezes starting to expand, that will give you a clue as to what will happen in the next day. So the last 15, 20 minutes of the day will give you the best clarity, but I start watching it from around 2 o'clock, because what we tend to say is retail will open the day, institutions will close the day. So what you really want to be doing is watching what institutions are doing in the last 30 minutes. So if there's a rally at the end of the day, there tends to be a carry forward for the next day. If there's a sell-off at the end of the day, there tends to be a sell-off the next day. So you've just got to keep your head straight. A lot of guys will always look at their plans and go, well, my plan that worked when the market was great has to work now because it worked then. And they don't realize how the market starts to shift. So I'm always saying to people, refine your plan. Know the strategies that work for you. Don't just copy blind someone else. Their temperament, their emotions, their baggage, whatever it is, it's completely different to you. You know, you can replicate to a degree, but at some point you have to personalize. You know, it's very similar to martial arts. It's like, I can't be a world-class athlete in jiu-jitsu, no matter how much I try. I was the last at the trough when it came to handing out physical attributes. Okay, I was the last guy. I was the guy that was sidetracked and distracted. Okay, I can't copy someone else's trade plan. I can't do that. I have to take his trade plan, look at the underlying theme, and then take the theme and then modify it for myself. If I can't do a specific trade or a specific type of setup, then I don't try and replicate it just because he was good at it. You know, it's all about take what you can from others where they've been successful, modify it for yourself, and see if you can create your own recipe for success. And that's the most important part of trading. You know, a lot of guys think trading is about the trade. Hey, buy now. Hey, sell now. It's not about that. It's really about, here's what I'm doing and here's the setup. So when you see this again, you can do it on your own. Because if I said to you, buy now, I'm not telling you, should you sit in front of your screen and, you know, watch the trade? Should you be sitting there? Can you go to the toilet? You know, what happens if the sell order comes and you're gone, right? What happens if the market starts to shift and you get nervous and you exit, but everyone else held and he sells for a profit and you get out for a loss? All of those things start to materialize. So if an alert that you get from your buddy at the gym is like, hey, buy company A, you've got to put it through your mechanism of your plan in order to manage the trade. It's not the trade, it's the management that goes wrong. You know, that's really the key. So in this market, your plan, your trade, your emotional stability, you know, now's not the time to be trading with the low blood sugar. You know, like you've got to be really, you know, fast. And a lot of our trades now, I mean, my average hold period has come down from around 22 days per trade down to 12, because we start becoming a lot faster at what we're doing now. We don't want to be hanging around and seeing profits evaporate because we were greedy for an extra dollar. You know, you've got to be quite clear on that. So yeah, I think this market's got opportunities. It's just a question of how you apply those opportunities to your plan, or how you apply your plan to those opportunities.
So why is September, you mentioned September and warned about September. Why is that such a down, like usually a terrible month.
Well, it's the end of a quarter, right? So a lot of the rebalancing that happens between the major funds tends to happen around September. You've got the end of the holidays. You've got the, you've got the carry forward in August. August always is a horrible month because of summer, right? So, all the fund managers who can manipulate the market are all in the Hamptons, riding their boats and jet skis, and they don't give a crap about us retail, right? So they're all doing their thing. So liquidity starts to dry up, and then spreads start to widen. So a lot of people look at their positions, particularly novice traders. They'll look at their position and go, crap, I'm down 65%. Let me exit the position, not recognizing that spread differential between the bid and the ask, which is driven a large portion by liquidity, is distorting the performance of that trade. That trade may be profitable 2 weeks from now when liquidity comes back and the spreads start to narrow. So they start exiting. And the problem is selling begets selling, right? So when there's a selling mindset, there'll be more selling coming, and then more selling, and then more selling. September just traditionally hasn't been a particularly good month for many, years, right? So what causes it? We can always hypothesize. I look at it and go, it's the end of a quarter. Your last month of each quarter tends to be pretty, when there's that rebalancing that takes place towards the end of September, there'll be a lot of, selling to rebalance here. It's just the end of the season, and it usually suckers people in, because a lot of people then lose a lot of money towards the end of September, and they like, that's it, trading's not for me, and they give up. They like, that's it, I'm done. And then they miss the October, November, December Christmas rally that happens, right? So
I'm looking forward to that.
Yeah, that to me is always the best trading time of the year, is sort of October to February, somewhere, in those months. I've often felt with my data that I have of my trading that's where I make, 60 to 70% of my money is usually in that period of the year. So they get suckered in, they get beaten up, spat out, they miss the rally, they come back in January going, okay, I'm going to do it again. And then they get whacked by the end of February. It happens again. So most people have this horrible alignment to operate the opposite to how they should, right? They land up going, well, in September, you should really be managing your account for the rally that happens after September, right? You want to be reducing the number of positions, so you've got very little exposure to the downside, knowing that that rally will start, and then when it starts, you're ready. No, that's not what most people do. What they do is they're trying to time bounces in the September month. They're losing, blow out their account, sit on the side, lamenting, saving up. End of December comes, they go, okay, I've got enough money. They've missed the rally, the recovery, and now they catch the tail end of the falling on the next one. So it can be pretty tough for retail guys. A lot of traders, there are a lot of ways to make it work. And what I've seen with a lot of my clients is the planning part is the most neglected part of trading. If you could put it into professional sport, it's like you're not going to take a new student at your jiu-jitsu club with one lesson and say, hey, competition next Saturday, good luck.
Yeah.
Don't do that. You practice, right? You come to training. It maybe takes you 6 to 7 months of practicing before you get ready for your first competition. Even in your first competition, you've got a set game plan. You know that if the guy catches you here, I'm going to do this, this, and this. If he catches me, I'm going to do this. You don't just go in and randomly say, oh, I'm going to go fight Roger Gracie because, I saw him on video. That's exactly the mindset that traders have, is that novice traders come in, they get one successful tip from their buddy, and they go, oh, I'm a trader. Oh, I can do this. This is pretty easy. It's one trade. They made some money, and now they think they can do it again. And that's when they get kicked in the nuts. So the trading and the planning and the preparation and the practice, some of my clients are always surprised when I tell them I still paper trade for a lot of strategies where my data is saying to me that my setups are wrong or I'm mismanaging it. I paper trade them until I'm better, and then I go and play for real. I don't just play for real and then go, oh well, I just lost another grand. You don't do that. It's like that's the equivalent of breaking your elbow in an arm bar. It's like, oh, okay, broke my elbow. Let's go back and do it again.
Every time you train, break your elbow.
Yeah, it's just, I think sometimes people make it a lot harder than it should be. And I know that people will often say, Oh, but he puts too much detail at this part and this part and this part. At the end of the day, I do what works for me. And I know and I recognize that 99.9% of the world are not going to have the same level of maybe discipline or maybe process that I have. But that works for me. So if it works for me, I know that if you took my process, modified it to yourself, you should get results that look fairly similar. It shouldn't be exact because timing will always differ, but you should get similar results. And that's why trading as an activity fits certain personalities. It's not for everyone. You know, like they say, jiu-jitsu is not for everyone, but everyone can be for jiu-jitsu or something like that. It's like trading.
You have to modify it, definitely. I just, from the work we've done together with a Rogue and everything, looking at your resume, you've definitely developed a lot of systems, and efficiency seems to be, with your career, like in the banking. I was looking at, it's like, I can definitely see like how data driven, like you've been for a long time, like in everything.
Yeah. Well, you have to be, because in this game, you can convince yourself of a result that doesn't exist, right? Your emotions take over. It's like you have one bad trade, you lose money. The normal reaction of someone who's lost a bit of money on a trade that went wrong is to beat themselves up, tell themselves that they're stupid, that they're terrible, that they're useless, all the negative descriptors, right? They just, lambaste themselves. How on earth are you going to create a positive trading environment when your self-speak internally is negative? It doesn't happen. You can't convince yourself to be positive or trade positively if you're negative to yourself. The amount of times I have people come to me and say, I'm an idiot. I screwed up. I caused this. I go, whoa, let's stop with the language that puts us down. Because as soon as you start internalizing that negativity, your brain is going to start trading to that negativity. So everything starts, snowballing from there. So what data does is it takes away the need to make an emotional judgment on yourself. I don't sit and look at my trades and go, I'm such an idiot. I shouldn't have done that. I look at my data, and if my data tells me I shouldn't have done it, I'm still a good guy. I know that I'm still an effective trader. It was just that setup was wrong and I made a mistake. Okay, I make a mistake, I tag it, I log it, and I move on. I'm never going, oh, I'm such an idiot. I shouldn't have done that. I lost money. You don't do that. In trading, your self-speak and your psychology probably counts for 80 to 90% of your success. So if you haven't got a data-based or a data-driven process of self-regulation, you are vulnerable to your hyperbole in your head. It's like, oh, I'm such an idiot. Really? You weren't an idiot. The market does these things. Okay, move on. But you'll be sitting there in the doldrums with an umbrella, in the rain. Oh, I'm so bad. I'm so bad. I'm so bad.
People undermine themselves with that negative self-talk in a lot of ways. Like I hear people and I'm like, wow, you're really insecure and lack confidence, and it's a problem with not just trading, but their lives in general.
The thing is with trading, you bring baggage to the screen, right? You bring all your insecurities and all your, damage that was done to you as a child. I mean, all of it comes here, right? Now, each of us are going to just, demonstrate that in different ways. And this is why data is so important. If you're not tracking exactly what you do, why you do it, and how it worked when you did it, you have no basis by which you can judge your success or failure. There is no way to tell. Because if someone comes to me and says, oh, that trade over there, I screwed up. I mean, you've seen the trade log we've done for the last 300 days, right? There's 1,500 trades that we've done. We've got a win rate. We know everything that we have, right? If I look at that and I go, I lose on one trade, does that materially change my success over the last couple of years? No, it's a loss. We have them. We move on. We don't sit there and lament it. Okay, if we are and we're going, wow, that was a bad one. Well, did I oversize it? What was my rule? If my rule said 1% and I put in 5% and I lost, is it the trade's fault? No, it's me. I broke the rules. Okay, well, don't break the rules again. And then you carry on. It's just, you have to find a way to manage that. That to me is the difference between a trader who is consistent and a trader who is inconsistent. It's how you manage that self-speak. It's so important.
I think it's a matter of perspective when you think too, like after it takes a little while to understand that little slice of your like whatever trading career is a drop in the bucket of the whole thing if you're going to keep doing it for a while. So like people get mad because they lose individual trades, like maybe 2 or 3, and they don't realize that like you're not necessarily going for every trade as a winner. You're going for profits over a long time.
Yeah. There's a big difference between, building your P&L successfully over time and trying to hit a home run every time you step up to the plate. You can't. Any trader, and this is another thing, psychologically, when you have a novice trader step up to the plate to do a trade, his intention is always home run. There are very few that are sitting there going, well, I know I just need to do a 20 or 30 or 40% profit on this one, and then I'm going to move on to the next trade. So expectations are never, ever customed to the trade. It's always, it's home run or bust. It's like, if I don't hit a home run here, I'm a loser for the next 20 years kind of thing. So traders have to build that into their plan. When you look at the statistical probability of hitting a 7-trade losing streak in a 50-trade portfolio, it's like 90%. If your expectation is, I'm never going to lose, I'm going to win on everything, and I'm going to hit home runs on every trade, without understanding the statistical probability of you hitting a losing streak, you shouldn't trade. Just don't trade, because you're setting yourself up to fail, because that losing streak will happen, all right? And when it happens, you will not have the tools in order to manage your reaction to it. You're going to either get completely depressed, you're either going to revenge trade, you're going to blow out your account. There are a whole lot of things that are going to happen because you couldn't deal with it up front. With me and my plan, I know I'm going to fail. I know that. I already accept it. My 10-year history is a 68 to 70% win rate. So I know out of every 10 trades, I'm going to lose 3 to 4 trades. So my job as a trader is to take the losing trade. It's a bit ironic that we say that, but my job is to take the losing trade, because if I can get to the losing trade and get through it, I know the winning trade is over there. I can't get to the winning trade until I've got through the losing trades, right? You have to have volume going through your account. So if you're not doing enough trades, all right, the thing is, you don't know the distribution of losing trades when you get into trading. You don't know if you're going to have 21 losers in a row. We don't know, because over time, your 70% win rate will play out, right? So we don't.
The law of large numbers, you just
exactly
have to keep doing it.
Exactly. That's why when you lose and you hit these losing streaks, the worst thing you can do is stop. The worst thing you can do is stop. What you should do is downsize your trades, make them smaller, and continue. Or paper trade. Continue to paper trade, because those trades are still counted. They're just not having a real impact on your account. So, psychologically, most people aren't willing to put in that effort. They're not willing to put in that effort. So that's the difference between people who build a sustainable trading business over time and people who have great profits for 2-3 months and then they lose it all. They give it all back. So management of your business and your psychology is far more important than those 1 individual winners or 2 individual winners or 3. That's the whole thing that we try and do with the teaching, is get people to run this like a business. If you were running a sandwich shop and one day you didn't sell any sandwiches, do you shut up the whole shop, give up, and tell yourself you're a loser? No, you open the shop tomorrow and maybe change your pricing, maybe offer better sandwiches. Maybe no one wants, shoe leather and polish, or, maybe that's a bad idea, a bad analogy, but you change the product that you're distributing. And that's what you've got to do, is you've got to have that business mindset to running this. So no one makes an emotional judgment on their sandwich shop without sales numbers. So it's the same thing that I do with the trading, is that, I know which strategies and which markets give me profits. I'm not hell bent on one strategy just because in theory it sounds great. There's times when that strategy just doesn't work. It's not that the strategy is wrong. It's just, it's not the right strategy for that time. So having multiple strategies, but knowing your success rates and your errors that come from those strategies, that's the source. That's the secret sauce. That's going to make the biggest difference in someone's trading career, is knowing that. But unless you're tracking it, all you have is opinion, and your opinion is going to be emotional. So it becomes hard.
What are we looking at in terms of sectors and stocks right now that you think are
right? So I think at the moment the opportunity really sits in healthcare, right? So let me put you in the middle of my screen so I don't look like I'm squint. There we go. So looking across the sectors at the moment, you can see that we've got a lot of sectors that are below the weekly 21. That needs to be restored, right? So the weekly 21 is critical. When we break the weekly 21, we've got sentiment, we've got momentum, all moving against us in those sectors. So, you know, you don't want to be selling put spreads, right? So that what I do here is I look for opportunities to see where the recovery is coming from. So obviously in industrials, we're taking a lot of pain. You know, we can see the 4-hour squeeze is fired short, daily squeeze is fired long. So this one will translate to that one. So I think we're going to see continued weakness here in XLI in that sector. Now, that doesn't mean we don't play there. It just means if you're going to play there, it might be a bit of a reversal type trade. So we're going to stagger our way into it. We're going to make sure we buy at good levels because this can bounce, right? When it bounces, we want to be positioned for the bounce. You don't want to be positioning yourself in sectors that have already made the big move, right? That's a no-go. We want to be building it. Remember the rotational graph that we do? We want to be doing it in that red zone, potentially building there, moving it into the blue zone, building more there, and taking profits in the green while avoiding the yellow. That's the whole rotation. So XLI, we've got some weakness. We've got a little bit here in healthcare. Now, this short firing 4-hour squeeze may translate into some problems over the next day or so, but that's okay. I'm comfortable that we've still got trades. You know, if we look at the 21 and the 34 EMA and the 34 and the 55, we still positively stack. So a medium-term trade in that area with those stocks is a pretty good idea. I like that. Still got a double green rating as well. If we look at utilities, I like the fact that the squeeze is fired long. What have we got down here? The SPY is still bullish, although it's below the weekly 8 or the daily 8, and it's below the daily 21. So I would be avoiding these. The only one that I would really be looking to do something with now is utilities, with a potential opportunity in healthcare. Real estate is always, you know, it's maintained its strength for some time, but it doesn't have sufficient delta within the group in order to trade the options. So you might want to trade the shares there rather than the options. The big mover for me over the last couple of days has actually been biotech. So looking at XBI, which has got, or let's have a look at the stocks that I follow here in biotech. You can see a lot of the ones are negative, but Moderna, unbelievable, like unbelievable. This trade is up, I think in our book, it's up close to 300% since we went into it. We've been trading the stock, bull put spreads, as well as long calls. It's been a very, very profitable trade for us. One of the best of our last year. The other one is Celdex. This has also done really, really well over the last couple of days. And then BioNTech, BNTX. We've been trading this since last week. And we've been able to capture a fair bit of gains here as well. So those are the three that I've been watching and trading on the biotech side. If we look at some of the healthcare stocks, let's go into healthcare and have a look and see what's holding out, what's really looking good there. If we just filter here by the weekly squeeze, the only one that's firing long is TMO. And if we pull up the graph of TMO, we can see that, you know, momentum is dropping here on the squeeze. We've got some nice pullback that we got there. So that's the pullback we're looking for. But now the stock has started to rebound. If it can get above this 521.62 level, you know, it could bring into play the 530.9 level over here. That doesn't give us much space on a $500 stock. So it's not really a trade that I would be chasing right now. I think that the price needs to pull back a little bit, possibly down here to the 34. And then there may be an opportunity over there. As far as what I'm looking at, these are the focus trades that I've got at the moment on the long call side. So obviously Apple remains a key stock for us. little bit of temporary weakness below the 8, but still an opportunity to capture a medium-term to long-term trade on Apple. If I go through this list here, Google, phenomenal stock. I mean, Google is changing. You know, Google used to be one of those, you know, tech stocks, you know, like high growth kind of stocks. It's really becoming a stalwart kind of stock for your portfolio. This stock, if it gets anywhere near the 34 EMA, it's a buy. I mean, we had a trade that we built about 2 weeks ago and we missed it by a couple of cents. It was pretty upsetting that we didn't get that movement. If you look at the green line, it was just above our setup that we had put in play. We did go and do a trade on that candle here. And our trade was literally a bounce down to this box. We call this our risk box, into our risk box, and then bounce it into the square, or sorry, into the circle. That was the trade that we had planned. The trade played out, but we missed this literally by, you know, it was like 30 cents. It was an auto trade that we had put in saying if Google had fallen down into the box, we would have been able to sell some put spreads and we would have traded it into here. And as soon as we got in, we landed up getting the pullback. So now it's coming back into the box. You can see it touched a bit of the box. So I'm looking at this a little bit closer today. It's got downward shifting momentum. So I think we might land up getting it somewhere around the 34 wave here. If we can get in somewhere around here, -1 ATR, -2, somewhere down here, you know, getting into Google there is a good start. We would certainly do a pilot position somewhere here. And if it did fall through there, we would go a little bit bigger. And then, you know, just looking at some of the other ones, you know, Moderna just continues to be, you know, I read something today where people are describing Moderna as the Tesla of biotech. I mean, everyone knows my feelings on Tesla. So, you know, hopefully, I don't know. Let's see where it lands up. I just think that this stock being included into the S&P 500 gives it a little bit more momentum. 318.89, this red line, oh, sorry, 321.16 is the line. It's already broken above the line. That pulls into play the 351 level. So this could be a drive up to 351. So if you're looking to catch a momentum trade prior to earnings, it's got earnings in 12 days. I think that there's some residual momentum here. I think that there's some possibility to maintain a sort of position here. We've got long stock, long calls, bull put spreads. We've got the whole bang shoot here on Moderna. But at some point, we're going to have to, you know, take some profits. It can't do this forever. So
yeah, it seems a little late to get in.
Look, if you're going to do it, one of the safer ways to play it would be via a butterfly. So you do a forward dated butterfly. You know, it depends on your feeling on earnings, right? If you want to hold this through earnings, that's a risk in itself. I think it becomes less about the stock and more about expectations, right? So if you're looking at Moderna and you're going, well, I'm going to hold it through earnings, just be aware that earnings is like black and red and roulette. You know, it could be either way. I would look at doing a trade that expires before earnings, possibly a butterfly, and I would use it somewhere around the expected move. So if the expected move is a $10 move from here, you put your, you know, 335 as your mid strike and then make it 10 wide. If you think Moderna is going to move above the mid strike, make it a broken wing, bring in the outer strike closer to the 335, maybe a 340, and you've got a potential trade there as well. But as far as, you know, put spreads, you could do a possible day trade on a put spread on Moderna, but just make sure that your short strike is somewhere down here at the +1 ATR. You know, here you're looking at +1 ATR being around 257. So I don't think you're going to get paid a lot. You know, there's definitely no premium down here for put spreads. If you're going to trade a day trade on a put spread, you're going to have to do it close to the money, but you got to get out quickly. Because if this starts to reverse on us, it's going to be pretty dramatic. It will be a pretty dramatic decline. But as far as the market is concerned, there's opportunities, just play safe. You know, like anything, if you're going into a jiu-jitsu match and they've changed the rules and we can get punched in the face, you know, if you know there's a possibility to get punched in the face, you're going to cover your head. You know, unfortunately, most people only start protecting their face once they get punched in the face. So, right. just trade safe. The most important thing is just trade small. You don't have to put in big bets. This is not a time to have big bets in any direction. Today historically has been a very, very bullish day. One of the strongest bullish days of the year is today, right? So that's history, right? We know that was coming after the big decline of yesterday. Tomorrow is one of the most bearish days of the year. So, all of the stuff that we're getting back today could be given back tomorrow plus interest. So, position yourself to where the puck is going. Don't play to where the puck is, because you'll always be missing out. So it's an interesting time. Let's put it that way.
Well, appreciate your insights, Chris, and we'll let you get about your day trading. So
awesome to see you, my friend. We'll see you next Tuesday.
Yep. See you then.
Okay. Take care, man.
Take
Ciao.
care.
Bye.